All right, welcome everybody. We're going to get started in about a minute or so. So just hang tight and good to have you here. All right, welcome everybody to Stock Analysis Friday. It's great to have you here and welcome. Okay, so a couple announcements before we get going. First of all, next week is Thanksgiving on Friday, so we're going to skip next week and we'll pick it up the week after, okay? So that's just a quick announcement I wanted to make. All right, let's go through some of the items I want to cover here, and that includes our risk statement here. We want you to understand that there are risks involved in trading the financial markets. It is possible to do some or all of your money trading. So please know what you're doing and always use risk control. And remember, we work in a realm of probability. So you're going to need tools to do this, trading tools to do this. Just don't wing it. Also, too, be sure that you're using risk capital when trading the markets, and also check with your financial advisor or money manager before putting real money on the line with any of the suggestions, either here or anywhere else. And of course, make sure those suggestions are suitable for you, because they know your personal situation. And of course, we do not. Now, if you need help with risk control, I've got several books available. And my book called Money Management for Traders, which is the second from the right in the green, is a great book for new folks because it is concise and specific. So there's items in there that you can apply right away to your trading environment and get you geared up on risk control. We also have a new book coming out called The Art of Trading, second edition. That'll be out in the spring of next year. And, you know, our first edition, The Art of Trading, came out in, 2008. So it's due, all right? So we're in the new book, we're going to put a lot about the new software that we have available since then. And it's going to be a great book. And we're almost finished with it. So get ready for that. You can also pre-order it. I'll put some links in the recording area for that. And then, of course, we have a whole suite of software. We have charting software. We have scanners and risk control. And we really try to focus on all those different aspects of trading. Like I always say, you know, it's one thing to have a system that tells you when to get in and when to get out. It's another thing to be able to find those stocks to get in and get out of, right? So the scanners fill that void. And then, of course, our risk control software does the heavy lifting. So you're always trading with the proper trade size and risk to reward. So definitely check those out. And then finally, thanks for being here. All right. And if you're watching the recording, give us a like as well. Those folks live, feel free to give us a like too. And in terms of looking at stocks you want to look at, just type them in caps. Okay. Stocks or ETFs we look at during the day here. So definitely check those out. All right. Let me go over a few quick things I want to cover here. The first stock I want to look at, or ETF rather, is gold. Now, when you look at my charts here, notice we have 3 time frames. We have a 60-minute over here. We have a daily chart here. And we have a weekly chart here. So the weekly chart, we're looking at the long-term aspect of the market. The daily chart, we're looking at the intermediate. And the 60-minute chart gives us the short-term look. This is called multiple time frame analysis. And basically notice that the symbol that we look at is the same for all 3 charts. So we're looking at the same stock or market on 3 different time frames. And we do this because it helps us with our timing of when to enter a trade and our overall analysis. So every time we look at a stock today, we will, of course, do that. All right, so here's gold. Now, here's the weekly chart on gold, and I'm going to open that up a little bit so we can have a broader look at it. So in terms of the Elliott wave, now Elliott wave is a form of technical analysis that applies a wave count based on mass psychology of fear and greed and cycles in the market. And so there are 5 waves in a trend. And when we look at gold on this weekly chart, this is a wave 3, this is a 4, and this is the 5 target right up in this area here. So we've got some more movement up in the wave 5 target area. And our PTF, which is our indicator in the center, and if you're new to us, this is a great little indicator because it has a 75% accuracy rate. And it's basically saying we will get more highs. So that's a really good clue that wave 5 is not over and we're heading up. So we are kind of drawing these fib retracements. Now, fib retracements and fib extensions are used to kind of figure out where markets will pull back from, and those are fib retracements, and where markets are going to excel and eventually go higher, and that's a fib extension. So the retracement caught this pullback beautifully, and so now we think we're coming up into this wave 5 target zone. So our target on gold is between $201 and $233. Okay, and it's sitting at 163 right now. And we've been waiting quite a while in order to go long in gold. And we had a trigger to go long last week. All right. And so it's looking pretty good. Now, a couple things I want to point out here. The daily chart, which is this one here in the center, okay, is showing that we have the move up and we have bullish momentum. So this is the OWL indicator. And that's looking pretty good at this particular point. PTF is yellow, so that's neutral. That's okay to go long or short on that. And the only thing on this is we have some bearishness short term coming in. Now, what does that mean? Well, it means that we're probably getting a pullback in this big move up here. All right. So, and that's kind of typical. You normally get some type of pullback after a big run up. So, you know, if you got in early here, your stop is here, hey, you're in great shape, just leave it alone. But if you're thinking about trading it now, what I'd like you to do is wait for the pullback to finish. So maybe it'll pull back in here, maybe it'll go a little lower, but this has to turn bullish. This has to be green. We can't have any red at all down here. And we have pyramids that are pointing down too, which is our price pattern trade indicator. So they're showing a trend now to the downside is developed. And that trend, of course, is going to be the pullback. So on gold here, if you're not in it already, let's wait. Okay, I would hold off a little bit on that before going in. Now, silver is the next one that is talked about a great deal in the markets. And that's popped up as well. But this one here is not quite the same as gold in that we have a red PTF here. So this red PTF is saying that there's a high likelihood that silver, the bottom in silver, is not in yet. So I'm going to be not recommending this. We have red here. We have red here. So silver's a pass. We'll keep looking at it. But things have got to change pretty abruptly for that to turn around. So keep that in mind. Now, the USO market, which is the ETF for oil, all right, is one too that has pulled back quite a bit. All right, and so see here it is here. So wait until this is done. Okay, so we got red over here, so we're still coming back, and this bottom could be a bottom, and we're certainly hoping it is, because a lot of people went long on this, and there's our stop right under there. So let's see if that holds. If it goes down and makes another low, all right, then you'll get stopped out and you'll have to reassess that market and try again. So that's kind of where you're at now. So if you're not in it, don't go in it right now because it's pulling back, unfortunately, okay, if you're in it. So that's USO. Now, the next one, TLT, is one I wanted to cover before we got into other stocks here. TLT is the bond ETF. And on this ETF here, we've got some movement to the upside, but again, a red PTF. So this is saying the bottom is not in yet. And our target low for TLT is 91 basically to 73. We came dang close here back in October. But because this is red, it looks like it's going to be heading down at some point. And also notice it's also red on the weekly chart on the far right. So we've got two charts longer term that are indicating lower lows. However, this is green, so it looks like we're going to pop up a little bit more. So I imagine we're probably going into this area here before we have another move down. So a little bit more upside, but not enough, I don't think, to trade it. So I would leave it alone, and let's wait until that bottom. I do think when TLT bottoms, it's going to be a great buy. All right. So those are kind of the ones I'm going over right now. Now, if you have any, feel free to type them in at this point. All right, so we have crypto up here. Crypto, stay away from crypto, okay? They're having their own set of problems here. And as you can certainly see, and I think probably you all know about reading about the FXN exchange problems. So that's going to rock this community for quite a while. So definitely stay away from that, and we'll see what happens. Now, what's interesting too is on the real estate ETFs here, if we just take this one here, notice we're starting to move up off a bottom, which is kind of interesting. It's actually almost a fairly bullish looking chart here at this particular point. We got a little bit of red on the 60-minute, so it's kind of pulling back. But the interesting thing about real estate is, if you think about it, interest rates are coming up, right? So why is real estate now doing better than it did back in October? Well, I think a lot of it has to do with the fact that prices have softened, and those prices have softened enough to bring people back into the market, even though the interest rates have increased a little bit. Now, historically, the interest rates are still fairly low compared to last year. Of course, they're not, but historically they are. So I think you're not getting any overbidding anymore. You know, and real estate depends on where you live. Of course, it's very local type of investment, but I think that's compensating the lowering prices, and no overbidding now is bringing people back into the market because they feel they can get a good price on a house as compared to what they could get last year. And even though they're paying a little more on the interest rate, they don't mind doing that because they're not overpaying for the house, so to speak. So kind of interesting, All right, so let's see what you guys have to look at here. Let me go through the chat area here. Kind of quiet today, huh? All right, let's take a look and see what the intraday markets are doing. Okay, let's take a look at the M&Q market. So that seems to be coming down a little bit. The overall market is up 121, but the NASDAQ is coming down a little bit. And notice here, let's see what we got cooking. Probably getting close. This is a 1-minute chart, by the way. So this is a day trading time frame, 1, 5, and 15 second. So we're gotten bullish divergence here. We had a nice short trade on this earlier, but we're getting close, I think, to some form of a bottom here. Okay, so that's kind of where we're at now. Let's take a look here, run over and see. The E-mini probably won't be too much different because it is an equity index like the M&Q. All right, so there that is. We're starting to see bullish divergence in there as well. So a nice move down in the morning, but now it's kind of bottoming. Let's see what crude oil has to offer here. And I'm looking at the January 23rd contract. Good liquidity on this contract for short term here. And bearish. Okay, let's take a look at this. So on this movement here, this is setting up to be a tremendous, believe it or not, short trade. So if you were a day trader here, let's draw these retracement levels in and get a little clue of where we think this is going to retrace. And notice that it has retraced here. So here's my analysis on this. This is a 1 minute time frame. 3, Elliott wave 3, 4, and then we should see prices moving down into 5. We have a red PTF, tremendous target, great risk to reward. As soon as this goes red, okay, we're setting ourselves up for a short trade here. Okay, so that's looking really pretty good there for a possible day trading short trade this morning. So close. All right, so that's a really good one out of all the ones I've seen this morning in terms of a possible short trade. That's a good one. Let's run over and take a look at gold. Now, gold's a little finicky because gold, the liquidity kind of gets a little bit low after 9 a.m. Pacific time. But we've got a red PTF here, all right, but we've got a green PTF on the 60. So no trade on this until those become more aligned and in sync. So you pass on a trade on this. So the best trade I see this morning out of these handful that we look at is a short trade on the crude oil. Okay, so this is how you would use our tools to actually day trade the market. Very similar to how we position trade it. All right, so it's setting up pretty close for a short trade. Now, you have two types of trades you can take here. All right, we've got a red PTF, and basically that's putting the target here. So this is saying with a 75% probability, we're going to go lower than this. The trick is, where do you put your stop? Because you could have your stop here. It could wiggle on up here and then drop down, and the PTF could be right, but you could be stopped out, right? So stop loss placement is very important, and I have a lot of courses on how to do that. Now, the other thing too is if you consider this a scalp trade, you do not have to wait for a pyramid, okay? You could take it as soon as the owl goes red. If you want to take it as a trend trade, you would wait for the pyramid, okay, and then take it on down. So where do we think this thing is going? Well, if this is the top here, then we can use, of course, fib extensions and draw them on down there. So let's go ahead and do that with extensions and start basically at the same anchoring points that we use for our fib retracement, and yet bring it on down. So this would be the target around 76 all the way to 75, so a little lower than the PTF low. So that's basically where we think crude oil is going to be when the timing indicates a short trade. And we're getting close because we just got a red owl there. Okay, so there you have it. Now, because prices are still near the high, you could do your calculations for trade size and maybe put your stop up here, as long as your risk to reward is at least 2 to 1 to the target, right? And that would call for a lower trade size, yet at the same time, your stop is farther away to allow for a little bit more volatility. So that's the kind of way I would look at. Now, on crude oil, on my stop, if you want to use here, I would put it about 5 ticks above that to allow for any type of wiggle room or running of stops. So that's kind of where I'm at right now, especially on the crude oil and the gold. You have to be careful about giving those stops a little more wiggle room, because on low liquidity, they can be hit very easily. All right, so that is that. So that's setting up pretty good here. All right, so let's see what we got. Boy, quiet today. All right, so listen, I'm just going to leave it right here, okay? And let's see what happens on this crude oil trade. I don't see any position trading being mentioned here at all. So I think people are kind of gearing up for the holidays. So let's just keep it right here and see what's cooking. Let's see how this unwinds. So if you were to take a short trade here, okay, and your stop was here, all right, there you have it, okay? There you have it. So that's, you could technically be short on this based on our software tools, and you'd want your stop up at least here. And if you want to be a little bit more conservative and put it higher, that's fine. But, you know, my feeling on that is if we get stopped out, you just wait and do it again. All right, go with a high position size based on the top, give it a little extra room. All right, and then you're good to go. All right, Kevin's typing in MOS. So let's go back over to our other time frames for position trading and take a look at MOS. And we'll come back to crude and see how that's working out. All right, so MOS. All right, so Kevin, on this one here, let's see the weekly chart. Let's go out and take a look at this long term. All right, so right away on the weekly chart, all right, a couple things we got to see here. Big move up, back down, sideways for a decade, right? Now we're getting that move up again. So let's not worry about what happened in 2008. If that's a 1, this is a 2. Are we beginning a 3? It's possible, all right? More importantly, all right, because you're probably not going to want to be in this for 10 years. More importantly, you want to look at this, all right? This is indicating there's a 75% probability, all right, that we're going to make a higher high. So the question is now the right time to pull the trigger, meaning has it retraced enough? Well, let's kind of just draw some fib retracements in here and kind of get an idea of possibly where we might have a corrective area. And we've hit it, okay? So we're definitely inside there. And if we draw some fib extensions on this weekly chart, let's take a look and see where we could end up there. So let's draw our extensions and see if the target range, pretty much exactly the beginning of the target's exactly where the PTF is telling us prices will go. So the target is technically 81 roughly to 105, right? And you've got the strength of the PTF behind you for additional confidence. So we want to be kind of looking at a long trade. Let's see about the lower time frames. All right, so we've got a go on the daily. All right, that's looking okay, but a no-go on the 60. All right, and notice that on the 60 here, we have a situation where we're pulling back. So you got to wait, okay? We're still in a bearish move down, so this is still kind of coming down. And why get in now when it looks like it's going to be quite a bit lower before this move back is done? So I would hold off on this. It's looking like probably down to 46 or so, maybe a little lower before this thing can turn around or will turn around and go back up. So let's look at it the next time we get together. But I would hold off on that for now. But I would definitely be bent towards the upside. Okay, definitely be bent towards the upside. Frank says love is the symbol. All right, Frank wants to share a little love here. L-O-V. Let's take a look at that. All right, there you go, Frank, showing you some love here. Let's see if love shows it back to us, right? All right, so let's see what we got cooking here. All right, green PTF on the weekly, but we've had a dramatic pullback and not much history, okay, on this. So we've had one big move up and one big move down, all right? Boom. So here we are. What do we do? All right, well, this is green, so it's indicating that next time this swings up in trends, it should get above there. So that's a good sign for a long trade, right? Let's see what the lower time frames. Okay, I'm kind of liking what I see on the lower time frames. Check this out. We got bullish divergence, okay? We've got a classic bottom type of thing. We've got a green pyramid. We've got a little bit of red here. All right, so if you went in earlier, you're in great shape. Just keep your stop at the bottom. If you're thinking about going in now, all right, let's see how that owl, wait for that owl to turn green on the 60-minute chart. I'm really liking it, all right? The only thing is that 60-minute chart's got to be green. We have a bearish pyramid too, so I don't like to trade against those. So let's seriously keep an eye on this. If you're in it from a previous entry where things were not pulling back, stay with it. Just have your stop at the bottom, okay? So I'm liking it, but I think at this particular point, maybe another couple days and you can go long on it, okay? I just think we're gonna have a little pullback for a little bit of time here. All right, let's keep going here. See if I don't miss any. Okay. All right, so the next one is Key. Key, how are you doing? ALGM. ALGM. Now, next week, like I mentioned before, we are going to skip next Friday because it's Thanksgiving. All right. So happy Thanksgiving to everybody. I'm sure everybody will be cooking and doing stuff. So we'll pick it up the week after. All right. So again, not too much history on this, but it's definitely now trending up. All right, so it's looking pretty good here. And weekly chart's not helping me that much. I mean, look, there's just not that much information, right? So up, down, up, down. So that is something it's not going to be any look for us. The only thing key I would say on this, I don't know if you're long on it now or not. It looks like we're going to get more highs, but this is setting up for a classic wave 3 here on the 60, which means we're going to have a pullback here before moving back up. So you've got to decide if you want to, struggle with the pullback or not. Okay, that's the question. And the pullback probably will be somewhere along this range here between 26.71 and 24. That's basically what we're looking at. We have bearish divergence. So we're probably going to get a pullback, let's just say to this area here before it goes back up. All right. So the question you have to answer is, do you want to take profits or scale out at this point? Because we are starting to get some pullback here. I'd wait for the owl to go red again and then scale out. We've got a greed bar up here. So I think probably at this particular point, okay, we're looking at a pullback imminent. Okay, imminent. And then after that, more highs. But you got to probably, give back 4 or 5 points on the pullback. So that's it. So if you're thinking about going long, I'd wait for the pullback. All right, I wouldn't chase this right now. All right, good. Thank you. Good one to share. I like it for later, but not right now. All right, Adam, how are you? Let's see, AMD. And then MRNA. Okay, so let's take a look at AMD here. All right, so let's open up the weekly chart first. And as you can see, we obviously looked at this last time, I think, Adam, for you. So in the case here, we pulled back to the target. We're now moving off the bottom. This is green, high probability, 75%. We're going to break above that high. So if this is a 4, this is a 3, this is your wave 5 target. This could be now going into a wave 5, and that would assume that this is the bottom of 4. Okay. Now, we don't want to jump the gun too much here, but again, we don't want to be late, right? So let's just see what the lower time frames are kind of showing us here. All right, they're looking pretty good. We've got green here, almost green here. We're coming off the bottom here. This was a wave 5 target on C wave inside wave 4. So that kind of completed there. Looking really good. This is good. This is a little red, but that's okay. It just means we're probably in a little bit of a pullback, but I think the trend is resumed up. So if you have our software tools, this is the way I would play it. I would get ready to trade to the long side on this. All right. I like it a lot. And I probably would try to time this when this goes green. So I would wait for this to go green and see if this pullback is it and it goes up, or if we're going to go back down and then up. So the bottom line is no matter what it does, you're going to put your stop at the bottom anyway. So any pullback you can will increase your risk to reward on the next wave 5. I'd use the target zone in the weekly. So my target on this would be about 179. Okay. So you got plenty of risk to reward. Even if you got in now, if you jump the gun, just put your stop at the very, very bottom. But if you have our tools, you can time it a little better when the owl turns green on the 60-minute chart. Okay. Good one, though. Okay. I think that's setting up really nicely. All right. Let's go ahead. Obi-Wan Kenobi. How are you? All right. AXSM. I bet you got called that a lot, didn't you? All right. All right. Let's see. And that's a compliment. That's a good thing, right? All right. AXSM. Let's see where we're going on that. All right. So now we have green PTF here. Let me open up that weekly and kind of get an overall view. All right. Okay. Okay. So not too bad. Let's just do a couple connecting the dots here. So we had a fairly significant pullback there. Okay. So if this is 1, let me redraw those. If this is 1, my problem with this is you went below 1. Okay. So that really can't be a 4. It would have to be a 2. So this could be getting ready for a bigger move than we think on here. All right. In other words, let me just get rid of these drawing tools here. In other words, if this is a 1 and this is a 2, then we could be obviously starting 3. And if that's the case, we should take out the high here. Why isn't this a 4? Because if this is a 1 and this is a 2, you already went below 1, and wave 4s can't do that. Okay, so it would have to be a 2. So that's still very bullish. All right, lower time frame, little volatile, isn't it? Okay, so you got to be careful in setting your stops, but you are still in a move to the downside that has not yet turned around. And I say that because look at all the pyramids here and red here. So this needs to go green. It looks a little higher on the prices would be good there. And then if you go long, put your stop here. So this is close. Okay, this is close, but I would look at this as something that's not a short-term trade though. I think you're going to need to be in this for a little while to get to almost double your money on this. So I'm not that excited about it from a standpoint of a short-term position trade because there's a lot of volatility. In other words, it's going to be messy on its way up, which makes stop loss trails very difficult. So I'd almost rather go in here, okay, put the stop at below this pyramid would be fine, and leave it alone until you get to the target. So that's kind of my take on AXSM. All right, DINO. Let's take a look at that one. And Obi, this is for you as well. All right, DINO has obviously been moving on a tear to the upside. Let's open up that weekly chart here. All right, kind of a roly-poly stock. Okay, up and down, up and down. And so not so great on the weekly chart, okay? I mean, it's obviously in an uptrend, but difficult to figure out a target. So let's see if we can do that on the daily chart. All right, so we got a pretty, I mean, look at that, pretty roly-poly movement up. All right, so here's my assessment of this. All right, this type of thing does not lend itself well for a long-term Elliott wave analysis. There's just not enough history on it. So on this here, and it's kind of messy. So on this here, we've had 1, 2, 3 pyramids in a row and bearish divergence. So it may go up a little higher, okay? But I can't say that with any type of great certainty, all right? Because it also could sell off. So I would not do this one at all. I think it's a little late, and I really don't like the overall structure on those 2 time frames. And if you look at the 60-minute chart, you do have bearish divergence. So I'm not saying the trend up is over. I mean, the pyramids are still, you know, got the stop way back here, okay? So, but eventually with bearish divergence and a fairly significant move up, you're going to get a pullback. So I think going in new now is more risky than just waiting, okay? Not doing anything with that. All right, and then what's the next one? ON. Let's take a look at that. All right, ON, we've looked at this one before as well. All right, so we had that pullback here. All right, and a move back up. We got a new high here compared to here. So we have bearish divergence building. Doesn't mean it can't go higher, but it is building. We had a nice retracement here. All right, and it looks to us like we're going to, based off the PTF on the 60, we're going to make another high. And that's about all I can say on this right now, okay? So it's still pulling back, but this is close to going green. So the pullback may be over. But again, the target on this, I think, is not as great as I'd want it to be to take a long trade on this, okay? So I would probably not do anything with this at this point. Not with the bearish divergence on the weekly chart like that, okay? All right, Stuart, how are you? GM. And that means General Motors, not good morning. Because I know Stuart. I know he likes to look at that stock. All right, so here is GM here. All right, so we've had a pullback down, and now we look like we may be bottoming, and are we going up? We got some an owl very close to going green on the weekly. That's significant. And certainly we've had one here, and we're going up into this retracement area here. So, okay. But we have a red PTF here and a red owl. So basically what this is saying, Stuart, is we're going to be going down short term. So let's take a look at it next time. I wouldn't trade this to the long side at this point. Okay. Let's take a look at TSM and see how that one's looking here. Just so you know, on the recordings, I put a timeline of everything we look at. So the recordings are kind of cool. You can go there, and if you want to, under the, not the comments area, but the description, if you click on more, you'll see the timeline of everything we look at today. And you can just click on the name of the stock and it will take you right to the designated time, which is kind of cool. And so you don't have to thumb through the whole thing. All right, so TSM. All right, let's take a look. TSM is bullish on the short term and showing this as a temporary correction on the long term. So where is this going? All right, so let's take a look at this. Let's draw some retracements in. Let me just make sure I got enough history here that I'm looking at. Yeah, that looks pretty good. All right, let me just break this up here a little bit. All right. So probably, boy, we're close to the target now. So probably 85 to 101 is where this is going to, this move up is going to end, and then it should roll over. This is green. This is green. All right. So it is still going up. All right. So no question about it. My problem with this is we're already so close to the target zone that I couldn't take a new trade here. And that's a problem because here is the overall problem is this. All right. It's basically showing that after the correction, it's going to come back down. Why do I say that? The red PTF. All right. It's basically saying that's the bottom's not in yet. So I would not take this to the long side. It's too late. You may have had a chance to trade to the correction, but if it gets in between the two blue lines on the daily chart in the center, I'd actually be looking for a short trade. Okay. So that's TSM. All right, Terry, TAP. Let's take a look at TAP. Let me open up the weekly. All right, big move down, as you can see. Let's put it in perspective. So big move down. All right, actually a big retracement. I mean, that's a huge retracement right there. So that's large, and that started retracing back in 2016. One of the things, boy, what a nice short trade. Look at all those pyramids to the downside. All right, so that would have been a great short trade there. All right, and now what are we doing here? All right, so are we bottoming and are we going back up? Is this a major bottom? Certainly could be, right? But, and we have no red PTF anymore here, okay? So that's no issue there. We do have a red owl. So, you know, we kind of like that to be green, but it's pretty close to going green. Let's see if we get any help here on the daily chart. Kind of messy because it's kind of in this range bound area. You do have a bullish pyramid. That's bullish and that's not red. So technically you could be long here. I'm just trying to figure out where a suitable target on this would be because I don't like to take a long trade unless I have a target. And even if I had a retracement target here, you know, we already hit it once. So we may go back into it, but I don't see a lot of potential on this. And let's see where we got here. So we got green and green there. So the pyramids are giving you a long trade. So if you just wanted to trade the pyramids without a target, your stop would be here. And if this continues to go up, you'll have new pyramids and move your stop up and try to take out profit on whatever swing we're in. In terms of the overall situation, not really 100% sure on where this is going. You almost have a pennant you could draw here and here. Okay, so there's quite a bit more room where it could go sideways before breaking out of the pennant. So, I mean, that's my assessment on it. It's not my favorite. Okay, I wouldn't be recommending it. But it technically, from the art standpoint, is generating a long position. I just don't know where the target's going to be. All right, let's keep going down here. AMD, we looked at that. Oh, MRNA. Yes, MRNA. Let's take a look at that one. And Adam, this was for you. Moderna. Okay. So this is one we looked at before, and we said it was due for a correction, and you can certainly see it's moving right into that corrective area. And actually, this is a conservative target because based on this, it looks like this could be a major bottom. All right, so that's actually looking pretty good. Now, all right, here is the other thing to think about. Look at the 60-minute chart. Boom, straight up. Okay, there's no divergence yet. Okay, there's no divergence yet. So it's, you know, still going up. My problem with this is that this would have been a better trade, okay, a while back. And when we looked at it before, you know, when the pyramid was here, okay, much better trade, better risk to reward. If we are only going to get a correction, in other words, if this is not going to break out but go back down, then this target will, this fib target zone will hold. However, it's very possible, because this could be a major bottom, it could blow right through here and keep on going up. So I think here's how I would play this. All right. If you're not in it already, you know, with your stop down here, okay, never put your stop on the pyramid on the first breakup. Always put it at the bottom, because you always have wave 2 that could take you out, or even a B wave on a corrective. So right now it's due for a correction at some point, because things just don't go straight up forever without a correction. And certainly we haven't had a big correction. We had one here, but it'll probably correct again. What I would wait is, let's wait for prices to attack the bottom again and see if that bottom holds. Because if it does, they'll reverse, and then boom, that's where you want to go long. All right. It's a little too late to go long here, I'm afraid. If you're in it already, I don't know if you're in it already, but if you are, you know, your stop's down here, you don't do anything. You just stay with it. But that's kind of where I'm thinking. So I actually like this one for a watch list, because I think if that bottom holds, this is going to be a big winner. Okay. All right. Frank, TWM. Sounds like an airline company, doesn't it? Fly TWM. All right. So here's TWM. All right. And Frank, TWM is an inverse ETF, right? So what we're doing here is that as the market is bullish, these will pull back. And that's what we've seen on this bullish run. But check this out. I mean, you know, here is the area for the stop. This is the kind of gobbledygook you can get before a market takes off. So if the market does indeed sell off, which we think eventually it will, all right, then this will do pretty well. We've got a green PTF sitting on that daily chart. Now, would I go into it today? Probably not. And the reason for this is this. Okay, we have a red owl sitting there and a bunch of bearish MP pyramids. So let's wait until this turns around again. And if the bottom holds, then we're in good shape. All right. So it depends on what you're using this for. If you're using it for a hedge, then your stop should be down here. If you're trying to short-term trade this, you got to wait before you go long. Okay. So that's kind of the way I would do that. A lot of people are using these as hedges, and I recommend doing that on these. But the thing is, the key is if you're going to use it for a hedge, you can't look at it. You don't bother looking at it every day and put your stop at the bottom. And the idea is that you'll do really well on them if the market reaches a bearish target zone. Okay, so that's kind of the deal with that. All right, so kind of cool. Anything else? I think we went through them all. All right, pretty good. Let me just quickly go back over to MCL, because this is one we were watching, okay, for a short trade. And there, all right, so there you can see it's moving down. So this is a day trade that we talked about if you got in here late. We were looking at the 1-minute time frame on the micro crude, and basically it reached its corrective zone. So our target is 76.84 for today. And as you can see, we got a bearish pyramid here, and it's starting to move in that direction. So this is red's looking really good. In terms of going in now, I'd wait, because you'll get a pullback. Your stop should hold. Don't move your stop yet. Stop should hold there. All right. Now, one thing I've noticed on trading MCL or any of the lower time frames on these things is that when you get a statistical profit that is in a range, and I'm not going to tell you the range because it depends on your account size and how many contracts, But what we do is we scale out when we get that statistical profit, because most of the time you get a pullback when that is reached. So it's not basically always waiting for a signal to scale you out, but a statistical number of how much profit you have. And that's based not on just one trade, but that's based on a large sample size. So when you hit that profit, then that market reverses. It doesn't change trend, but it pulls back. So that's an ideal place to scale out if you want to. All right, so that kind of is the situation here. So we've had a number of price bars in a row. We're still moving down. The trade should have been taken at the pyramid on the chart in the center, which would have been right here. Your stop could go here, but I always put it at the top. Okay. And then now if we get that big pullback, boom. And if you want to scale out, we're probably pretty close to a statistical scale out here. So especially with bullish divergence building. So I would probably, this is not bullish divergence on the daily chart because we don't have a low here, but I would probably think you got a 1B here, not a bad area to scale out of a third or even a half. Let it come back up, turns around, you can go back in or just keep the half trade size. So that's how I scale out quite a bit when I'm day trading based on that statistical number. Okay, so that's kind of it for there. All right, anything else for today? Good session today. All right, I'm going to leave it here. If I see a stock come in or something, I'll run and, of course, and look it up for you. But we'll see what happens with this, and I'll probably in the room in 5 or 10 minutes or something. Okay, so thank you very much for tuning in, everybody. And in terms of a winner today, we've got 3 that I like for a watch list, but not necessarily a trade right now. And those 3 are LOVE, AMD, and MRNA. I also like gold, okay? But gold is, let's just take a look at gold real quick one more time. Let me just run over here, GLD. All right, so here's the deal on gold. I think it's due for a pullback after this run up. So I think the idea on this is we're going to wait for that pullback. If this is a 3, we're probably looking at a pullback right around in there. Now, the difficult thing here is that if this is your first leg up, your pullback actually could be all the way back to the bottom, okay, before it goes. So you got to hold off on this one and see if that bottom holds. So if you're not in it super early, wait, okay? The only trade you could have been in earlier on this is when this turned green and got above the pyramid, okay? And then your stop would be down here. Otherwise, right now, I would just go ahead and wait because we're pulling back. You can see that on the 60-minute chart. But I'm bullish on gold. I do think it's going to do well here after this pullback. All right, let me see if there's anything else. Okay, I'm going to go back to the crude oil and see if we're getting any type of pullback. All right, we're going to get a pullback pretty soon on this. You can see the bullish divergence here on the 15-second time frame. You're seeing this classic basing now after a move down. So we'll see. Okay, we will see. So I would expect some type of move up, and then we have to see if this top holds. All right, so I would scale out here. You're also at a point of inflection just about between here and here. So scale out, because if this is correction's not over, you'll get stopped out. So take a half off here. And then if we go back up near the top, put another half back on if the top holds. All right, so that is it. Okay, so Gene's telling us, and this is true, next Friday is Thanksgiving. So we're going to skip next Friday, or everybody's going to be busy that day, obviously. And then we're going to resume right away on the following Friday. So it'll be 2 weeks that we'll be back. Okay, and everybody have a great one. All right, so I'm going to leave it on here for a little while. I think we've covered everything for today. And you guys have a great one. And thanks for being here, and thanks for giving us the likes, okay? All right, have a good holiday coming up next week. And we'll see you back here in 2 weeks. Thanks so much. All right, guys, we're going to end the room here. This short trade looks like it's unfolding really, really good. You'll probably get a little pullback, but I think you're good to go down to that target as long as you don't trail your stops too close. All right, so we'll see you back here 2 weeks, and have a great Thanksgiving. Bye-bye.